Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, November 3rd, 2022. We're also doing the daily Apple report through November. Be sure to watch that video as well. Please click like on both if you haven't already. Clicking like actually helps us get found on YouTube when people search for Tesla or Apple analysis. And also subscribe to the Wicked Stocks YouTube channel if you haven't already. It'll apprise you notification each and every time new content has been uploaded twice a day now with the Tesla and Apple reports. And please share the video if you would with friends and colleagues. Let's jump to the charts. Another Fed hike on Wednesday sent the market south into the afternoon, and Tesla settled below this pretty classic descending flag, that channel top at 218.66, having closed above it a little less than a week ago, put the market in a sort of a bullish recovery framework into later November. I was then anticipating the mid 260s as a 2 to 3 week objective, but yesterday's settlement back below 218.66, which was our buy signal support, now resistance, has put the market back on its heels. The next 2 to 3 weeks, I'm anticipating now 173.90 to 182.30. So rather than expecting the mid 260s, now anticipating the lower 180s, possibly lower 170s over the next 2 to 3 weeks. That remains in effect below 218.66. Let's work down from there, and I can show you that over the last week and a half, 2 weeks, these extremes, the move low against the high that was put out on Tuesday, 5/8 back is 213.41. I have that as a soft intraday support level. It's very close to the high of the low as well. In the October low, the high that day was 213.90. So 213.41, this is well suited for aggressive, and I might add very aggressive day traders who trade more than just the trade of the day. These are the sort of the scalpers who are grabbing several points. From 213.41, we can bounce to 218.66 on an intraday basis quite easily. But if we break or open today below 213.41, I do think that this 204.99 level is in reach, which is preceded by 206.85. That is the May low from earlier in the year. That's not on this chart. That zone, roughly 2 points wide, can contain session weakness. I've demoted it, if you will, from a 2-star to a 1-star support area because I think it is now likely to be violated over the next few days, possibly today. If we close today below 204.99, 197 expected tomorrow, and closing today below 204.99, I'll go back to this chart here. If we close below 204.99, not shown here, we could, and I think probably would, by the end of next week, continue south into this 173.90 to 182.30 targeted support region, which remains a 2 to 3 week objective right now below 218.66. And if we close today below 204.99, I think within 3 to 5 days, we should slip into this zone of long-term support. Now let's talk upside today. Do I have it labeled? Not entirely, but I'll show this here. If we push or open today above 218.66, we can reach 227.28, which is the low of the high. I don't have it shown here. There's only so much text you can squeeze into this chart. But to 227.28, pushing or opening today above 218.66, we could reach 227.28 intraday. And if we close back above 218.66, that stabilizes the dynamic through the rest of the week and quite possibly into next week. I'm not so sure I would then jump back into the 2 to 3 week buy signal again, expecting 264.33. I think it becomes relatively stair-step by that point in time. So if we close above 218.66, I'm definitely off the expectation for 173.90 to 182.30 over the next 2 or 3 weeks, but I'm reluctant to expect 264.30 over the next 2 or 3 weeks. I think there'll be plenty of give and take on the way up, so the dynamic is a little different. I will say this in terms of upside today, and I don't see this happening after yesterday's big sell-up, but you never know. If we push up above 227.28, 234.12 is in reach, and there's nothing but a simple trend line off these lows. It can contain daily buying pressures. And if we close today above 234.12, then yeah, I think over the next week or two, the writing is on the wall. We should then push into the mid 260s. This is the weekly chart, the mid 260s and mid 270s here, able to contain buying through the rest of the year if tested between now and the end of November, and quite possibly into the first quarter of next. And I don't want to get too far ahead of myself here, so I'm just going to kind of leave it at that. I'll leave you with this image here. Bottom line, we are below 218.66. We settled back below this formation that completely neutralized the 2 to 3 week buy signal, and in the process, a reversed momentum on the 2 to 3 week time horizon. Now anticipating 173.90 to 182.30 over the next 2 or 3 weeks. And that is all I've got for Thursday's Daily Tesla Report. I'll be back tomorrow with Fridays. You have a great day.